stocks have taken a beating on US President Donald Trump-led global trade wars. After a $5 trillion plunge in the S&P 500, investors are looking at the US Federal Reserve for reassurance on the economy. With the Fed in wait-and-watch mode, investors will pass the central bank's projections and statement for directions. However, Fed Chair Jerome Powell faces the tricky task of reassuring investors and conveying the central bank's readiness to act if necessary. The US Central Bank is widely expected to keep interest rates unchanged later on Wednesday. However, interest rate markets show 3 rate cut bets for this year. And these are going to start in June, and that is more than the 2 cuts projected by the Fed's previous estimates. If US policymakers stick to their 2025 plan of only 2 rate cuts, investors say it will be crucial for the Fed chair to stress the bank's readiness to act if needed. The Trump administration has escalated and constantly changed tariff threats against America's biggest trade partners. And more importantly, the US administration hasn't done much to downplay recession risks. Treasury Secretary Scott Bessent said the US and markets need a detox after Trump said the US economy is going through a period of transition. The 2-year Treasury, most sensitive to the Fed's policies, has declined almost 60 basis points from a mid-January peak to a trough this month of about 3.8%, the lowest level in over 5 months. Stock A sell-off has resulted in a 10% plunge of the S&P 500 from its peak, wiping about $5 trillion. To put that in context, those losses on Wall Street over the past month are more than India's GDP. Wall Street's so-called fear gauge, the VIX, at one point last week climbed to the highest level since August. Gold has hit a new record high after pacing past $3,000 for the first time ever last week.